Sturgill is the Chief Market Strategist at Smart Data Trading and is with me today. What a great day. What a great time, actually, to talk to you because the markets have been so interesting lately. Let's just start with what you see in the price action and where you think we might be headed as we round out the fourth quarter.
You know, October has been a very interesting month because it's been mostly sideways, right? A lot of kind of building up in the market. We've seen certain pops here and there in relationship to a lot of the earnings reports we've seen, whether it be an Amazon release where, they gap up 20 points on news, of course, AI based. But for the most part, it's just been sideways, which to me makes sense given the fact that the government shut down and we're not seeing any kind of funds move because of that shutdown where we typically otherwise would. And it's really that liquidity that has been pushing the market higher along with the weaker dollar. So yeah, this sideways action in October makes sense to me.
Do you think that it's just the uncertainty about how long is this going to go on? What will this mean for the economy? When we're dealing with the government shutdown, that the market's kind of waiting on?
Oh, it's definitely waiting. Yeah, it's waiting for more money, more liquidity to come through. I mean, that comes through three things, Jane. It comes through commercial bank lending, it comes from the Fed balance sheet, or it comes from the government deficit. And when there's the government shut down, we're not seeing that mechanism move the markets with liquidity. We're not seeing the Fed doing that yet, even though Powell did just say that he's going to stop quantitative tightening. We got a rate cut. I do think those three factors ultimately will lead the market higher into the end of the year and then into Q1. Yeah. But for right now, while that's on hold, sideways we go.
Well, and at some point, it's going to start impacting the economy. We're hearing about airlines and people, I've had friends who've had their flights canceled because of the shortage. And I'm sure the Washington, D.C. area local economy has been feeling the effect as well. So I guess at some point that will start to show up.
I think you're right. I mean, I was in D.C. earlier this month. I took my son there. We went to all the museums while they were still open. But yeah, why go to the museums or D.C. itself if that's all closed? And so
if you're not going to work
Yeah, I completely agree with you. I do think that it is making a short-term impact, but I also see the business cycle as right at its beginning right now. And as financial conditions ease, as rates drop, as we see, if the dollar can stay weak, the DXY index, if it can stay below 100, then yeah, ultimately, I think with what Powell signaled at the last rate cut, I think you're going to see the Fed open its balance sheet. They're going to print more money in order to be able to pay for the deficits that have been created during COVID. And that liquidity, I think, ultimately pushes the market higher.
Now, are there economic indicators that you pay attention to? I know we haven't had a lot. We've had kind of, we're data hungry with the government shutdown, but are there things that you look at more than others?
Yeah, certainly. I mean, I like to look at the ISM, which is a really great indicator for the business cycle where we at. As long as we can get back above 50 and we can start to see the business cycle swing back up, that's going to matter. I like to look at total liquidity. One of those things is M2 money supply. And so, again, asking how much liquidity is making its way into the market itself. And then, of course, rates, because if we can have low rates, a weak dollar, money going into the system, I mean, that's the recipe we've seen for up and up and up.
Yeah, those interest rates are just like the lifeblood of the economy.
I mean, financial conditions.
Everything.
Yeah, everything.
I mean, you realize that as you get older, it affects everything. What about next year? What are you seeing for 2026 and what kind of things are on your radar screen?
Well, what's on my radar screen is obviously AI, technology. Bitcoin has been such a big name in this market because as we print more money, you see more and more businesses create these strategic Bitcoin reserves because if the money that businesses are holding is losing its value as we print more, they have to shift into something that's going to fight that debasement. Right? As that loses, value, Bitcoin, because only 21 million ever created, will hold that. So that's important. The one thing I think, Jane, into the next year that sends us into the midterms is the beginning of that business cycle fueled by lower rates and more liquidity. And I think a business cycle is going to grow with lower rates and more liquidity to see it grow.
So we've had 2 positive years in a row. We're on track to one this year.
Yeah.
Could see another one next year.
I think we're going to see that up into the midterm elections. I think this is what we're seeing based on the ISM and how we're starting to see it turn back up with the business cycle into 2026.
Now, what about the economic policy from the White House? I mean, the tariffs kind of freaked everybody out earlier this year. That seems to have settled down. What kind of economic policies are you watching from the White House? How important will those be?
I mean, I think they're everything, frankly. When we look at what Donald Trump has said, even this past weekend when he was on 60 Minutes, he made it very clear what his focus is on, and that's on Bitcoin, that's on AI, making sure we have the chips and the technology and that we are the world leader in those. And so, I mean, he has told Powell, hey, I want the dollar weak. Did the same thing in 2016. That's what Scott Bessent has done. He's also said, I want to see rates come back down. If it doesn't come from you, it's going to come from somebody else. And so it's that policy, that fiscal policy that he's driving, and I think it's going to make all the difference.
Okay. Finally, you mentioned Bitcoin, crypto. Are you a supporter?
Oh, huge fan of it. It was created in 08, 09 for the very purpose of the fact that we got out of the global financial crisis by printing more money.
We had our white paper anniversary.
Absolutely.
Which like adds to the whole
Yeah, absolutely it does. Yeah, you ring the bell, it's an anniversary. But I mean, that's why it was created, to solve that problem, and the problem persists. We have debt, we print money to pay for that debt, we take out more debt, we have these credit debt cycles, and we have a big one from COVID. And so now we have to drop these rates and print more money to pay for that debt. And it's the same thing, which bolsters the case for Bitcoin, which has a fixed supply.
Yeah. And it's amazing to me that governments just continue to spend. They just keep doing it.
Yeah.
Even though there's all these signs out there, but they just, not just U.S., but everywhere. So
the alternative is equally bad. And so, once the toothpaste is out of the tube, you just got to have more cowbell.
Yeah. Fascinating. Ben, thank you so much for your insight in the markets.
Thank you.
Thanks.